What's up, everybody? Good morning. We are inside the gap. Yo, what's up, buddy? Good morning, man. We are in the gap. We'll probably get a little bit of a gap fill today on the spy. Little gap fill trade. Yeah, buddy. I mean, that's the zone we held yesterday as low a day, isn't it? Pretty much, y'all. Yeah, we can look at Microsoft. We're gonna switch it up a little bit today, guys. We gonna switch it up. So I'm gonna spend, I don't know, 10 minutes doing some TA review with you, maybe 15, 20, I don't know, but we're gonna take about an hour. And what I'm gonna do is dive into a little bit of a futures masterclass. So for those of you that are like newer to trading or maybe trade options, you want to get started with futures and you don't know the difference between shares, options, futures, you don't understand like tickers, risk reward platforms, all that. We're gonna go and dive through a super duper simple little futures overview to help you guys get up and running. And then I think we're gonna have a couple members normally tune in on YouTube as well. So if they're down to do that, we're gonna do that this morning from like 8:30 to 9:30. I'm gonna record that for you guys. You guys can get access to it, but I want to help some of you guys get up and run with futures. If you guys are interested. If not, then you don't have to tune in today. It's okay. Lemon Turner, what's up over on YouTube? Good morning. So, what can we see with the spy today? That's the question. Let me just do some quick TA on the spy. And then I'll look at your guys' stocks. Faux show. That's a decent little zone there. That'll be something to keep on watch for sure. Run that back. We're in the gap. So we'll really just be looking at trading off this little gap level today on the SPY. Are we respecting the body of the gap? You always want to double check and see what level of the gap you are respecting better. Hit the top it. No, that was high day yesterday. Kind of held it. Let's run that back to the wick because it gives you that touch point here as well. But then you kind of miss some of those touch points. We get inside of it, grind it inside of it. I kind of like the gap off the body because we get high day rejection here, low a day big push. You get pretty close to a little zone of daily support as well, because you could see that we would have a tight little zone right around that gap level anyway. So you would throw a zone just like right there in that region, and so that just gives you some double confirmation that you got a little zone right below the gap level. So okay, I can dig that. I think that's it's a good gap level. 599.38. We hold above it. We play SPY long today. If we get back below it, stay below it. There's going to be a little bit of room down into this, 598 level, and then a lot of room back down to like yesterday's low day. 595 on the SPY. Let's clear out the queues. Let's go back and let's take a Pikaruski and see where we are at right now at this point in time. I think we're still below this gap on the queues. And I'm on QQQ daily. Yep, we're still below the gap. So if we get inside the gap, we can fill the gap. Absolutely. But let's get an idea of what we could see if we do not get inside the gap to fill the gap. The gappity gaps. You know, it's pretty shitty price action. I'm not gonna lie, pretty crappy price action. On the queues, and so it's kind of hard to find like super tight, nice, awesome zones that you will want to trade off of. I'm gonna check this level to start. I mean, it's a pretty decent little daily zone. It's nice and tight. We got a couple touch points. You got 1, 2, 3, big move, 4, nice pop. Zones within 50 cents. Let's drill it to a 5 minute, see if it's even respected. It kind of was yesterday, not really. Let's go back and look at some of these prior days. Come down, bounce off of it. Decent price action. Nice pivots off of that level. Chop it. Don't respect it. Get above it, hold it, push. Crack, retest. I think we can widen the zone up a little bit. We should probably widen it a smidge. Might be a little bit bigger than a dollar, but I think we should open that zone up a little bit, because if we open it up, we get 1 more point. You get 2 more points. Then it puts the zone at 70 cents. It's a big zone. Let's widen it up and see what price action looks like once we take it a little bit further. You get a little bit more of a couple touch points on the 5 minute. Still chop it that day. How do we do yesterday off that zone? You know, decent. We've been holding it in pre-market. That's going to be the zone. It's about 70 cents, but that's the best of the best zone. That's like 514.34 to 515. So you're running about a 60-cent window, 60-cent zone. Not crazy about it, but it is what it is. That's really all you have to work with. I'm going to say like the next little zone is going to be right back down hither. You got a little 1.2 point, 3 point, but I like the pops off that zone. Gap down, drop off that zone. How did we perform yesterday around it? You did grind it. Snap back, higher low push. Pre-market resistance, that validates it. A little bit of a low in pre-market that validates it. Intraday low that validates it. Pre-market resistance. Yeah, that's a good zone. I like it. Next zone to the downside will be down here between 511.50 to 511.88. And I would say these are the main levels to watch today. On the queues, how significant's that mid zone? It's not all that significant. We're not gonna make it a line in the sand or anything like that. Yeah, man. That's really all we got. Little tap tap drop, gap up pop, nice high rejection. Yeah, that's a good zone. We're gonna make that a litz, the line in the sand. Get it in there, baby. All right, there we go. Yeah, so as long I like the SPY more today. So if the SPY holds 599.38, we get back up to those pre-market highs of 602. That makes sense. And then we may just see the SPY continue to rebound and close that gap from the big gap down from Friday and the Monday. I mean, SPY realistically has potential to get to like 606.80. On the SPY Qs, if the Qs can break inside the daily gap at 517.95 and stay above 517.95 today, we got a lot of room to the upside to like 528 on QQQ. So that one looks good. Hey, Josh, it's the Street Professor. What's up, buddy? That's a different username. How you doing, man? It's Lee. It's Lee. I know you by Lee now. Does SPY still have room to the downside? Yeah, so let's build the plan to the downside, right? We were just talking about if we stay inside the daily gap, how we would play it long with calls up to the top end of that daily gap. But the market's going to do what the market wants to do, right? So if we come back down below that 599.38, stay below it as intraday resistance, we have room down to this 598 zone. And if we fall below 598, stay below it, we do have room back down to 595. So yes, there could be some room to the downside today. It depends on what we do at that gap level. That's honestly what it comes down to. We hold above the bottom end of the gap. We could see some great upside. I would be looking to play calls. We get back outside of the gap, so we fall below the bottom end and then stay below that 599.38, right? I would play puts down to 598 and then 595. What do you got on the economic calendar for today? I know we have a data-heavy week, so today is Tuesday, January 28th, 8:30. So in about 16 minutes, you got durable goods data. Durable goods. You got CB consumer confidence data here at 10 a.m. And that's it for today. Tomorrow, you got the Fed rate decision, FOMC conference. You got GDP on Thursday with jobless claims, and you got PCE Chicago PMI on Friday. Plus, earnings are starting to kick on off here, guys. If you look at your earnings calendar, we got some big name earnings this week. Yep. You got Meta, you got Apple, you got Tesla. So we got some big name earnings this week. Microsoft reports. Microsoft before earnings. It depends on, are we at any daily like supply demand or any kind of like higher time frame supply demand? So let's go Microsoft on the daily. Like, do I just blindly get in the trades through earnings and hope it does something? No. But if we're sitting at it like a key level, we could justify a low risk, high reward entry, but you still have to assess risk taking a trade through earnings, because if it goes against you, you're pretty much going to lose your entire investment. So you should not invest more than you're willing to risk if you do any kind of trading through earnings. So, yeah, I mean, Microsoft at first glance, we're not at any key level. Microsoft reports earnings Wednesday after the close. So, I mean, I don't really see any kind of like key level that we're currently sitting at. So yeah. Meta looked good yesterday, but we pushed back in the all-time highs on Meta. So Meta is just showing a lot of strength to the upside. Meta's got earnings this week, so Meta's going to release Wednesday after the close. Right now, Meta is pushing up into new all-time highs here in pre-market. I mean, the sky's the limit on Meta. The sky's the limit. I can give you some targets to the upside if you want on Meta. Okay, nice little 618 retracement before pushing in the all-time highs. Let's take a fib extension to measure all-time high resistance. So swing low to swing high, back down to swing low. Your 100% extension puts you at 670.17. So like right around 670 is going to be the next level of resistance into these all-time highs, simply based on this fib extension that maps out overhead resistance in to all-time highs. So do I think we can come up to the 670.17 and then see some sellers step on in? For sure. Absolutely. Would I get short off that level? No. But if I was long on Meta, that would be a target on Meta. But I'm not going to get long off that level. It's just a reference point for a target. But right now, I mean, again, the thing is just pushing up, pushing up, pushing up, increased volume moving in, consistently hitting new all-time highs. The sky's the limit right now, man. I'm just going back up to make sure I didn't miss anything. Again, Microsoft, we're not sitting at any key levels for any kind of actionable trade through earnings. So I didn't see anything on that, but we can look at like, you know, Apple. We can look at Tesla. We got earnings on those this week. All right, did I miss anything? Nvidia worth a buy today? Well, let's go see. Did we come down into some of this lighter daily demand? We did. We hit it yesterday. We didn't really see a huge reaction out of it, but we are reacting out of it this morning. Okay. So you got a little bit of that, you know, daily demand gap up, nice little push to the upside. You got more demand down here, like September 9th candle. There's more daily demand. It looks like it'd be a light continuation off this little block here. So that would be something I would tread lightly. There was your impulse move, came back down into it, popped again. That impulsive move was better than the second one. So that looks like a slight continuation. Even that looks like a little continuation from back here, but that was created on earnings. So I like that continuation. Wouldn't trust it. This was fresh because this is the one that pushed us into all-time highs. We came into that daily demand yesterday. We bounced out of it. So now that I see that, I would go back into referencing this gap on NVIDIA. So I would put the gap level back up here on NVIDIA and see, can we push out of this daily gap today? Can we push out of this daily gap? So let's go ahead and mark up the daily gap. Resistance to the upside is going to be back up in this window here. Actually, we can run it up a little bit more. There we go. Right hither, right? I mean, right at yesterday's high day. That's going to be the next daily zone of resistance. Back up around like 128 to 129. We got this daily gap here between 118.80 to 120.90. If we can set up off that daily gap, we could see maybe an opportunity to get involved in some calls today on NVIDIA. You see how we are back above the top end of that daily gap at 120.87. And you see how we're bouncing off that level here in pre-market. I would say that if NVIDIA can hold 120.87 today and we can push off that level after market open, yeah, I think realistically you got some room back up to 128 on NVIDIA. Yeah, buddy. But if you fall below 120.87, I think you come back down to 118.84 before you possibly try and bounce again, because that would be the bottom end of that daily gap. So I would just really watch the gap level on NVIDIA. We hold the top end of the gap. You can get long back up to 128. That's your next daily zone of resistance. We fall below 120.87, I would be hands off until we get to 118.84. And if we have good price action there and start to push, then I would start to think about getting long for that move higher on NVIDIA. We fall below both of those two levels, there's going to be more downside here on NVIDIA. And I would say next area to the downside that we can realistically get to before seeing any kind of move higher. It's not too far off, but you do have more room to the downside. You're talking like 114.80 to 115.50 on NVIDIA. All right, for the 51 beautiful men and women that are here, Patrick, yeah, man. Who does not trade futures and who is interested in learning how to trade futures? And for those of you that want a simple, high-level breakdown on futures, the difference between options and futures, the ins and outs, how to get up and running with futures in the least amount of time possible. If that's something that you are interested in learning about, I'm going to take like the next 30 minutes to an hour, and I'm just going to rip through a quick little training I put together specifically on futures and help you guys get up and running if you guys want. If not, then we'll keep doing some analysis, and then I'll just simply do this later on today. Still going to get it recorded. I can send that out to you guys once it's done and recorded. You can go back, rewatch it, but it should help you guys out. It's a very high-level overview to get going with trading futures. Juan wants to learn. Patrick wants to learn. Novenmo is in equities. Got a couple people. All right, well, let's just dive into it then. So usually I'm not even here on Tuesdays. So I gave you some analysis on the SPY and the Qs, so you guys are good on that. All right, you got some analysis on a few other stocks as well. You guys are good, but I'm not even normally here on Tuesdays anyway, so I thought I'd show up, do a live little futures masterclass with you guys. Then we'll do a follow-up with some Q&A afterwards. Answer any questions you guys have. And if you guys want the recap, I can send you a link to the recap. If you want the guide, the breakdown that I'm going to present, I can send that guide to you guys as well, so you have something to go back and reference. And yeah, it's just a very, very, again, high-level overview. All right, well, let's do it, guys. Let's do it. Because I think everybody should, learn the skill set of futures, in my opinion. So right now, we're going to dive into a simple, quick, high-level futures masterclass. And I'm going to break everything down that is the absolute most important, right? If you know anything about me, I like to keep things simple. I like to keep things effective. I can take something that's looked at as complex and I can break it down so an 8th grader can understand it. So if you're expecting a lot of jargon, technical fluff, a lot of complex terms and terminology, it's not going to happen. I am literally going to simplify this down to where an 8th grader could understand what we're talking about today. And I want to just give you the most important things, that high-level overview, to get right to the point, to get you guys up and running with futures 10 times faster than trying to figure it out on your own, watching all these lessons and videos on YouTube, and still struggling with, how do I get started? What's a futures contract? What platforms do I set myself up with? What's a prop firm? How do I get set up with a prop firm in the first place? What kind of strategies are really effective and simple to learn to trade futures? So again, 30,000 foot, high-level overview, no fluff, no jargon, no BS, super simple to where an 8th grader can understand this to get you up and running 10 times faster. And then after this, we'll follow up with a nice little Q&A session, answer any questions you guys have, and make sure you guys are all set. All right, so let's just go ahead and dive right into it. And we're going to talk about really futures versus options to start. Okay, so a couple key takeaways. Futures, simply it's a contract to buy or sell something at a set price on a future date. That's what a future is. And then an option is a contract that gives you the option, right, to buy or sell, but you don't have to. That's like the main big difference between futures contracts and options contracts. But let's simplify it even more. What's the main difference? Futures are more simple, right? There's no time decay. There's no extra factors. You don't have to worry about delta, implied volatility. You don't have to worry about spread between the bid and the ask. It's a one-to-one. So it's just 10 times more simple trading futures contracts than trading options contracts. Because what do you have with options contracts? You have time decay. Those contracts will lose value over time. You're going to see things like implied volatility crushes, where the IV could be high and then drop back down, which kills the cost and will lower the premium. That works against you. You have to learn about the Greeks, right? The delta, the theta, the gamma, the vega. There's just a lot more complexities to trading options contracts than futures contracts. It's simple. You get in, the thing goes up a point, you make X amount of dollars. That's it. No theta, no delta, no big spreads or anything like that. It's just 10 times more simple. So why futures for day trading? I love trading futures intraday. Not really swing trading. Swing trading is better for options and shares in my opinion, but like scalping intraday day trades, like futures 10 times better in my opinion. They're easier to manage and they're more consistent, and you don't have to worry about time running out. Can't tell you how many horror stories I've heard over my 10 years of trading about a trader that took a 0 DTE option contract, right? They made a mistake. They didn't sell their position and the contract expired worthless. They come in with risk of like $100 on the trade, right? But then it expires worthless and they lose their entire investment. And they're like, I just lost $2,000, right? Because that contract will expire. You don't have to worry about that with futures, all right? So that's just a high-level, quick overview regarding futures versus options. Simple stuff. Now let's talk about like futures tickers and then dive into some like risk-reward per point with futures. So a couple key takeaways. Futures tickers represents different markets. For example, the S&P 500, the NASDAQ, crude oil, gold, silver, commodities, agriculture. There's so many different things that you can trade futures on, but we're going to talk about the most important ones, not even the most important ones, but the ones that you'll probably start trading in the beginning, the ones that are liquid, the ones that have tight spreads, the ones that are the most popular at the end of the day, right? The most popular ones are like ES, NQ, people trade crude oil futures, gold futures, silver futures. Those are the most popular ones. But there's so much more you can trade in the futures market. You could trade wheat. You could trade soybeans, right? But we're going to talk about the most important ones. And each ticker, right, has a set value per point that it moves. And when we talk about per point, we're talking about every dollar it moves. I don't like to look at it in the form of ticks, right? I like to look at it in the form of a point or a dollar just to, again, simplify it. So these are like the main tickers to know. You have ES, which is the S&P 500 futures contract. Every point that ES moves, your P&L is going to fluctuate by $50 for every contract that you have. If you trade MES, which is the micro S&P 500 futures, it's only going to be $5 per point that it moves. If you get in with one contract and it moves a point up, you make $5. If it goes a point against you, you're down $5. So it's 1/10 of the size. And that's what you're going to notice. It's about 1/10 of the size. Then you have NQ, which is the NASDAQ futures. So for every point that NQ moves, for every one contract you have, it's $20 per point. Okay. MNQ is the micro NASDAQ futures, and it's 1/10 of the size. So it's $2 per point. So one contract, it goes up a point, you're going to make $2. It goes down a point, you're going to lose $2, right? So that's how it is. It's a simple 1-to-1. Okay. Then you have crude oil futures, which is ticker CL, right? That's $10 per point for every contract you have. Then you have micro crude oil futures, which is MCL. That's going to be $1 per point. And you can go into like gold futures, for example. Gold futures, that's ticker GC. That's going to be $10 per point. And then you also have the micro, which is MGC, right? And that's $1 per point. So you see that the micros are 1/10 of the normal contract. So like ES, that's the normal E-mini contract. It's $50. If you go to a micro, it's 1/10 the size. Same thing with NQ. If you go to a micro, it's 1/10 the size. And it really follows suit with the main ones that you're going to be looking to trade. Why is that important? Well, if you want to start trading in the beginning with, say, smaller amounts of capital, like if you get into one ES contract and it goes against you by 10 points, which is not a big move, that would be $500. You're like, bro, that's a lot of risk. Okay, so how did you lessen your risk? Because you can't take less than one contract, right? You would go ahead and go into a micro, which would be like an MES. So in that same scenario, you take one contract, it goes against you by 10 points, which is not a lot. You'd only lose $50 versus $500. So how do you manage your risk better trading futures with smaller amounts of capital in the beginning, not to risk, say, $500 on a trade? Don't trade the normal contracts. Don't trade ES. Don't trade NQ. Don't trade CL. Don't trade GC. Trade the micros because your risk per contract is 1/10 the size. So it's important to know these things because you got to know the ticker to where you can calculate risk reward, right? And every single ticker is going to have a different risk per point per contract. And again, going the micros is simply going to allow you to take smaller risks. And it's a really good way to get your feet wet with futures as a beginner, with being able to really focus on risk management versus blowing up accounts. Okay. Now we're going to dive into platforms and then different types of demo accounts. And I recommend that every brand new trader at least get set up with one of these free trials with one of these platforms and open the demo account and start to practice trading futures on a free trial demo account. It definitely doesn't hurt. And you get about 2 weeks to do that. So platforms are going to be tools, right, to place trades, analyze the market. So that's where you're going to buy. That's where you're going to sell. That's where you're going to do your charting. That's going to be your broker and your platform. Okay. And then you can set up a demo account that's going to let you practice trading without risking real money. And so before you even fund your first live account, you absolutely need to get into a demo, practice, make mistakes, learn, and then risk fake money. Don't risk real money. Okay. The best platforms, to use for futures trading. My best part of this lesson. You got Tradevate. That's probably the most popular one that traders start off with is going to be Tradevate. It's user-friendly. It's great for beginners. You can trade on your phone as well. That's a nice thing. They don't have an app. You can actually go to a web browser, go to Tradevate, log in, trade on your phone, which is nice. And they give you a 2-week free trial to get real-time data, to get into the paper account, the demo account, to just start practicing. Okay, but then you have NinjaTrader. NinjaTrader is very popular, but it's more for like experienced traders. There's a lot more advanced tools, functionality within the platform. You just can't use it on a phone. I don't think they have a phone app yet. I'm not sure. But I know when I was using it a couple of years ago, you had to use it on a desktop. And it's just really complex. There's a lot of tools, a lot of features and functionality. It's definitely more for experienced traders. Would be NinjaTrader a good point in time, right? But it's really desktop focused. It's got really good charting features. They also do have a free trial. So if you want to sign up for a free trial, go to ninjatrader.com, set it up. But as beginner traders that are just getting started with futures, I recommend Tradevate. Again, it's user-friendly. You can trade on a phone. You get the free trial. You get free data. And you don't have to pay for anything for the 2 weeks. Now, here's the cool thing. If you want an extra 2 weeks, what do? Sign up with a different email and get another 2 weeks. If you need more time than that, sign up with another email and do it again and get the time out of it through those 2-week free trials. Okay, so practice trading in real market conditions. You don't have to pay for the data. It's fully enabled. You get comfortable with the platform, with trading futures before funding your first live account, before you start taking real risk. And again, it's going to allow you to test the market, test setups and strategies without risking real money, guys. So definitely go to Tradevate.com. On their main page, there's a big button that says try a demo for 14 days and at least get started for 14 days. Okay, and those are going to be the brokers too. Right now, there's a lot of brokers. You can trade futures on Webull. You can trade futures on Schwab, Thinkorswim. But when I choose a broker, I want to make sure that the broker is the absolute best for what I'm trading. I don't think Thinkorswim and Schwab is the absolute best broker to trade futures on. I don't think Webull is the best, right, broker and platform to trade futures on. I would say Tradevate is definitely up there, number one. Number two, NinjaTrader at the same time. So we all have different types of brokers depending on your style of trading and what you're trading that's going to be best fit for you. And the same thing applies with like equities, options, Forex, etc. You can trade futures on Webull and TOS. I just don't think it's the best platform and broker for futures traders. So again, the ones that I recommend, Tradevate, number one, NinjaTrader. But let's also talk about prop firms, because you got everybody and their mom nowadays jumping on this prop firm bandwagon, right? Signing up for combine accounts, getting funded accounts, busting them, resetting that process, trying to get funded with real money. But there's a lot of prop firms out there. There's so many out there. And there's a lot of bad ones too, right? Like that one-of-one funding. If you guys heard the horror story with one-of-one funding, new prop firm, it was being promoted by a lot of these stock market day trader influencers that have huge following, and they were just trying to make money through being an influencer, and they screwed everybody over. There were so many people that deserved payouts that met the requirements for a payout. They never got paid out. So they're investing all this money into combines. They're investing all this money into getting a funded account because there are fees associated with it. They're making money, right? They're meeting the rules. They're passing tier, and they're not getting paid out. And that happens all the time. So if you get set up with a prop firm, make sure it's a reputable prop firm. Make sure they've been around for a while, right? It may be a little bit more expensive, but at least they're not going to run out of liquidity. They're not going to go bankrupt. They're not going to shut down. And you're not going to risk making, say, 5-10 grand in a prop firm account and just losing all your money and never getting a payout. So make sure you pick and choose what prop firm you get set up with and choose a reputable prop firm. And so there's a big difference between a broker and a prop firm. A broker, you're going to set it up yourself. You're going to fund it with your own money, and you're going to risk your own capital. Okay? But with a prop firm, you're going to pay a few fees. They will fund you if you pass certain tiers and challenges, and then you get to trade their capital, and you don't have to risk your capital. So it's a way to get larger amounts of money to risk someone else's capital, not your own. And again, it gives you more access to more capital and more freedom, essentially. So big difference between brokers and prop firms, but same thing, gives you access to the futures market. And again, look at like their fees. Look at a prop firm's fees, even look at a broker fees, like NinjaTrader fees are slightly higher than Tradevate, for example. So look at their fees, platform fees, data fees. account requirements, things of that nature. But again, if you're looking at different prop firms, just find one that's reputable. So there's 2 prop firms out there. One of them is like the absolute most reputable. So the first most reputable prop firm that's been around for a while, it's TopStep. TopStep is by far the best. They're an industry leader. They have structured evaluations. They have proven reliability. They've been around for a long time. TopStep is the absolute best. Then you have Apex Trader Funding. That's the second runner-up. They've been around for a while. They're reputable. I have students that use Apex. They're pretty flexible on their evaluation rules. They do their payouts pretty fast. They're trader-friendly terms and stuff like that, but I've just had bad luck with Apex, and I've seen the way that they treat their clientele. They don't treat them at a professional level. They talk down upon people, and I've just never really liked how they go about handling certain things within their organization. And as a business owner that runs a few different businesses, client satisfaction and how we treat others is super important to me. So the way that I see them handling things kind of just gave me a bad taste in my mouth. So I don't personally recommend Apex for those reasons, but there's a lot of people that have funded accounts with Apex. They like them. They get their payouts, all that good stuff. But I like TopStep. TopStep, I mean, it checks every box on my list as far as a good company. They've been around for a while. So I would go set up with, TopStep if you want to start the process of getting started with a prop firm. But I still recommend going to Tradovate, signing up for that 2-week free trial, practice. And once you establish consistency, then think about opening up a TopStep Combine account, pass the Combine, get your funded, and at least have higher probabilities of getting payouts and making real money. So don't go start paying those prop firm fees until you practice first, okay? And so again, go to topstep.com when you're ready. It's only $49 to sign up for a $50K account. If you pass that challenge account, you pay a $149 one-time activation fee to get what they call an express funded account. And that's going to be the account that they actually pay you real money on, okay? So that's how to get started. Futures, tickers, brokers, platforms, the best of the best prop firms, just to kind of kickstart this journey. But let's dive into it a little bit more and talk about more trading related stuff, right? Account structure, different types of strategies, trade plans, and really help you bridge that gap. So now when you get into, say, the demo, you know how to structure your account, you know what types of different strategies work best, and at least you can kind of keep this momentum going. All right, so talk about account structure. Proper account structure is absolutely critical, right? It's the number one most important thing outside of mindset for, again, just long-term growth, to be a professional trader, to help you, again, manage your risk properly, to where you're not taking too much risk per trade and you put yourself in a position to like bust your account. So we want to make sure that we structure your account to protect that capital, to optimize your returns. Even if with a prop firm risking their capital, you still need to structure your account. And the structure that the prop firm gives you is not the right structure you should roll with, right? The reason that they structure their accounts the way they do, because it makes it really easy for a trader to fail. Their business model is subscriptions. They want you to fail your prop firm accounts, because what are you going to do? Sign back up, try again, fail. Sign back up, try again, fail. Sign back up, try again, fail. And then boom, maybe you get lucky and you pass the Combine. Now you pay that $149 fee, you lose it. Just to go pay another $49, try and pass. And it's a process, right? I've done math on their business model, right? Based on the amount of clients they have signed up per month, based on how many funded traders they have. They make millions of dollars per month in subscriptions, but they're not paying out millions of dollars a month in trading profits. So they're basically betting on you failing. That is their business model. That's how they make money. They don't make money by their 90-10 trader split where you get 90% of the profits and they make 10. That's a little bit on the bottom line for traders that actually make money, but their business model to generate revenue is betting on traders failing. So if that's their business model, they're going to make sure that, again, they can generate revenue. So the structure that they give you makes it super, super easy for a trader to fail the accounts. So you have to restructure their structure on your own if you want to pass it, if you want to start getting payouts, okay? But let's go ahead and dive into just some key elements of how do we even structure an account in the first place. So comes down to a few things. Number one, risk per trade. The golden rule of risk is 3%. You should never risk more than 3% of your account on a single trade. I like to go down to like 1 to 2%. I still think 3% is a lot. I like 1 to 2%. And I personally like even sometimes structuring accounts to go below 1% risk per trade, depending on the type of setup that I see. So again, for example, if you're on a $10,000 account, let's just say your account's 10 grand, and you're risking that 1 to 2% of your account per trade, that means your per trade risk should not exceed 100 to 200 bucks. You shouldn't be risking 500 bucks on a 10K account. You shouldn't put on a $1,000 risk on one trade if you got a $10,000 account. That's way too much risk. Again, the golden rule is 3%, but take it back a notch. Go 1 to 2% and really set yourself up for success. And so why does that matter? That's going to help you get positioned, right? Match your trade size, how many contracts, to, again, what your risk tolerance is. And that's when it comes down to picking and choosing the right contracts. So let's say this example that you're going to risk 1%. That's $100 on a $10,000 account. And let's say that you went and took 2 ES contracts. And the thing went against you by 10 points out of nowhere, which 10 points is not a lot. You've lost like $1,000 bucks. You just lost $1,000 bucks. Well, that's 10 times more than you're allowed to risk. So you can't take 2 ES contracts if your risk is 100 bucks. You need to match your trade size, your positioning, to your risk tolerance levels so you can pick and choose the right contract to trade. So in that scenario, you would take 1 MES contract. If you took 1 MES contract on that trade and it went against you by 10 points, you lost 50 bucks. That's below your 100. If you took 2 MES contracts and it went against you by 10 points, that's 100 bucks. That's within your risk parameters. You couldn't take 1 or 2 ES contracts. You could only take 1 or 2 MES contracts. So understand what your risk is. That's going to help you match your trade size to your risk tolerance levels that you already predetermined, that you assess. And then that's going to help you pick and choose the right contract to trade. Is it a full contract? Is it a mini? And then everybody should have daily loss limits, right? At what point do you walk away? At what point is the market not working with you today? You got to know when to walk, right? Most traders don't know when to walk, and that's when they blow up accounts. When do you walk away? Set a hard stop for how much you're willing to lose in a single day. I like to do trades. So if I have 3 red trades in a row, I'm done, right? That's how I like to do it. I don't like dollar amounts. I like 3 red trades in a row because it's really hard for me to hit 3 red trades in a row. And if I do, I'm off. Maybe I'm not mentally dialed in. Maybe the market sucks. That's when I walk away. So if my max risk per trade is 1% and I have 3 red trades in a row and that's my max walk away, I only lose 3% of my account on the day. 1 green trade wipes out my 3 losers. So that's how I like to set my daily loss limit. Not a dollar amount of how much I'm willing to risk dollar amount wise, but how many trades in a row. Is it 3 trades? Is it 2 for you? Choose which one works best. I like 3. And then walk away if you hit that limit. Protect your capital. Live to trade another day. All right? The last thing you want to do is overtrade, revenge trade, get greedy, and now you're down 10%. If you're down 10%, it's going to take you 3 green trades to barely break even and recover that, right? So don't risk that much. Set it at 1% per trade, 3 trades in a row of losses. You walk away, that's 3%. 1 winning trade wipes that clean. So it's a lot easier to recover with 1 great trade. And then, again, scaling up, when you guys want to scale up, don't try and scale up from 1 MES contract or 1 MNQ contract and try to go to a full-size ESNQ. That's silly. That's a 10x increase in risk. So going from 1 MES, then scaling up to 1 ES, that's 10x. That's way too quick on scaling up. Scale up little by little by little. So go from 1 MES, for example, to 2, from 2 to 3, 3 to 4, all the way up to 10, for example. And then think about going to 1 full-size ES, NQ, whatever the case is, but slowly scale on up as you build a buffer in your account, as you make money, as you have more drawdown potential. Then you could slowly start to scale up, increase your risk a little bit, which again, help you increase your reward. So scale up slow. Don't go all in. Don't force it. Take it at a nice, slow, healthy pace. And that's going to be the best thing that works for you guys when it comes to scaling up to make more money. Okay. Now let's talk about, again, restructuring the prop firm structure. That's what we talked about. If you just follow the structure they give you, you're going to bust the account in like a day. 100%, right? They don't give you a max daily drawdown limit. They let you take 5 full-size contracts on a trade with only $2,000 a drawdown. You take 5 NQ contracts on a trade, it goes against you by 10, 20 points, you've busted. They make it easy for you to bust those accounts because they want you to sign back up. That's how they make millions of dollars a month. So restructure their structure. Okay, restructure it. So let's go ahead and break it down on a Top Step 50K example. Okay, so here's some account limits to note. You have a 2K drawdown on that 50K account. That's the total loss allowed before you fail the account, and it does trail as well. So if you start with 50K and you go up to 52K, right, now you can't go back below 50K, right? So it does trail. So when you start day one with no profit loss at a 50K account, you could technically go down the $48,000, that $2,000, before you fail the account. But if you make $2,000 in profit, right, and then you go back below, say, 50K, you're going to bust the account because that $2,000 will trail up to 50K, and then that's where it stops trailing, right? So just be mindful of the initial $2,000 drawdown. That's the total loss before you fail it, but that will trail up as you make profit to that $50,000 area, and you can't go back below that, or again, you will fail the account. And these are the types of risk parameters that I teach my students that learn futures, that start trading futures day one. These are the risk parameters. They'll let you lose $1,000 in a trade. They'll let you lose $1,000 in a day. They'll let you bust your account in a day. That's stupid. So restructure their structure. Your max loss per trade should be $125. Max day one to start. $125 per trade max. That obviously keeps you really safe within that $2,000 drawdown. Okay? Now, as far as targets, like, okay, what kind of targets? You should be targeting like 2-to-1 minimum risk reward. Ideally, 3-to-1 minimum risk reward. So with the right entries, you always get the best of the best, tightest stops. It's going to be easy to bang out 2-to-1s, 3-to-1s. 2-to-1s, 3-to-1s. Those are your base hits, right? Focus on base hit, base hit, base hit. Don't focus on home runs. You're not trying to pass this in a day, but if you can stay consistent with base hits, you'll pass it in like 6-7 days. So max loss per trade should not be more than 125 in the beginning on a new prop firm account. It's going to keep you super safe within the 2K drawdown limit. And then target setups, at least 2-to-1, 3-to-1 setups. So your example, $125 of max risk per trade with the potential to make $250 to $375 per trade. That's a really good day. That's a good trade. Risk $125 to make $375. You do that 2 times, you've made over $500. You do that for 5-6 more days, you've just passed your combine account, and now you're trading with 50K of funded capital, and you get paid out on that money. Okay? We already talked about your daily loss limit. If you have 2 to 3 red trades in a row that are losses, that's when you should walk away. So what would that be if you had 2 red trades back to back, right? You would lose $250 on the day. It's going to take you 8 days of just losing. 8 days, right? Before you bust your account. You would have to have 15, right? 15 red trades in a row before you bust your account. It's going to be really fucking hard, excuse my language, really hard to lose 15 trades in a row at 125 loss, 125 loss, 125 loss. It's going to be rare. That's why we structure it this way, because it's dang near impossible, right? To have 15 red trades in a row. Now, if you don't know what you're doing and you just go into this right now, right here, you probably definitely hit that 15. You start in the demo for a couple weeks, you gain the skill set, you learn through some trial and error, you get consistent. It's going to be hard to have 15 red trades in a row. It's going to be hard, right, to have 8 red days in a row. So I like the daily loss limit of 2. If you want to go to 3, that's your walkaway point. It ensures you stay disciplined, you protect your capital, and you set yourself up for success, because it's rare you're going to have that many red trades back to back to back to back to back to back. So you're putting yourself in the best possible position to not lose the account, to pass it, to get funded, to make money. That's what you guys want to do. Make money. The numbers protect you, right? It would literally, you would need 15 consecutive losing trades to fail that account. And it's really unlikely if you just follow proper risk management and stick to high probability setups where you're banging out those consistent 2-to-1, 3-to-1 setups, and you're not risking more than $125 per trade. So let's do a quick little example, right? Let's say you're trading MES, that's $5 per point, okay? And let's say you took one contract. How many points could you risk? You could risk like, what would that be? 12 points? 12 points of risk times $5 per point is 60. Times 2, that's 120. So you could technically take one MES contract and it's $5 per point risk. You could lose, what was that? 24 points on the trade? That's a lot of risk. 24 points on a trade. That's wild. You're not going to take trades where you have 24 points of risk. Maybe, I don't know, 10 points of risk. So if you do that, you could take how many? 2 contracts at 5. So that's going to be $10 a point on 2 contracts, right? So $10 a point on 2 contracts. And then that would be 12 points of risk. So if you have a trade that you're like, okay, my risk is 10 points, my reward is 30 points, you could take 2 MES contracts to not lose more than 120 bucks, right? And your max risk is what? 125. So that's how you would go ahead and build the plan to get position. Where's my entry? Where's my stop? How many points? 10 points. 2 MES contracts would be $120 of risk. That's within my 125, but you put yourself in a position to make $375 plus on that trade. So that's how you're going to go through and basically plan things out, get structured, get positioned per trade. Now that you know how many contracts you could take, what the per point value is, and what your max risk per trade should be. Okay? All right. Let's go ahead and move on. And again, I am recording this. I do have this entire breakdown. I can send both of these to you guys to make sure that you can pick up where you left off. If you have questions, we'll answer those here in a moment. But again, high-level overview. High-level, quick, fast overview. Get you guys up and running. Okay? I want to talk really quick about a few different trading strategies that work well for me. Right? That work well for me. So a couple key takeaways. Simplicity is key. If this is your first time being here, I like to keep things simple, but really effective. I like to keep it so simple that an 8th grader can understand this. No jargon, no fluff, no BS. If you've been here for a while, you know that my approach is super simple, very effective. 70% of the time, right? My analysis is spot on. The trades work. They're profitable. And again, it's a very simple approach. We're not using all the fancy indicators. We're not using all the fancy BS. It's literally just high probability setups. Simple, high probability setups, okay? 2 strategies that work best for me in the futures market is I like to scalp off 5-minute order blocks, okay? And I like to also trade off key daily zones of support resistance. So go to a higher time frame, find all of your key, most significant daily zones, let the stock get to one of those key daily zones, get good at reading price action, and then trade off those zones accordingly. You always get the best entries with the least amount of risk and the highest amount of reward. It's a no-brainer, simple way to trade, and it's effective. And then scalping off 5-minute order blocks, okay, is like one of my go-tos. So identify order blocks on a 5-minute time frame. Look for price to revisit that order block. You're going to enter near the middle or the top or the middle or the bottom, depending on what type of order block it is, right? If it's going to be a bearish order block, you're going to enter near the middle or the top of the bearish order block. You expect price to fall. You're going to short that. If it's going to be a bullish order block, right, and you're looking to get long, you want to get in right at the middle or near the bottom of that bullish order block because you're expecting price to react to the upside out of it. So that's where you're going to get those fine-tuned, dialed-in entries on those 5-minute order blocks. And risk-reward simple. You're going to put your stop loss just right below or right above the order block, and you're going to set a standard 2-to-1, 3-to-1 risk-reward. That's it. You're not going to overanalyze it in the beginning. You're not over going to think it. You're not going to try and catch 1,000 points to the upside or the downside and aim for the prior swing highs and swing lows, right? You're going to see more losing trades than winning trades if you do that. So identify 5-minute order blocks, really hone in your ability to nail entries in those 5-minute order blocks. Stops go just right above or right below. So stops are always really, really tight, right? And then lastly, just set a standard 2-to-1 or a standard 3-to-1 risk reward ratio. Okay. And when you hit that quick 2-to-1, 3-to-1, take profit, let the base hits add up. Okay. And so here's a couple quick examples of order blocks, right? So here's a little bit of a 5-minute order block. Okay. You're going to go ahead and mark up the order block. That's a bearish order block. You're going to wait for price to return to the order block. Your entries are again in the middle or near the top of the order block. Ideally, the top 50% of that block are where the best of the best of the best entries are going to be. Stops go right above it, and then set a standard 3-to-1, 4-to-1, whatever risk reward. Take your profits when targets hit. Okay? That would be a bearish order block. Okay? A bullish order block. Where did my thingy go? Oh, no. Let me load that back up. One sec, guys. I just hit the X button. There we go. Right, and this is going to be a bullish order block. So we have this little 5-minute bullish order block. So again, you're going to be looking to get in at the bottom 50% of that order block. So in the middle or near the bottom 50% of that 5-minute order block. You're going to put stops right below the order block, and you're going to set a standard 2-to-1, 3-to-1 risk reward. If you hit target, you take profit, you walk away. This is a very high probability way of trading, right? 60, 70% win rate. So if you have a 60 to 70% win rate and you're consistently banging out 3-to-1 setups, you are extremely profitable. You are very profitable. And it's it. 5-minute time frame, 5-minute order block. Dial in the entries, low risk, good reward, 3-to-1 setups, consistently, 60% win rate. You're making money. 50% win rate. You are still making a lot of money. So you could be wrong half the time and be right half the time. Consistent 3-to-1 setups, boom, you're profitable. You're making money. And it's one thing. It's find the order block, wait for price to come to the order block, dial in your entries, set risk reward, see what happens. You're going to notice 60, 70+% of the time, you get those quick 2-to-1, 3-to-1s out of those order blocks. No indicators, no fancy stuff, simplicity. Simple but effective. Simple but effective, high probability setups. Okay? And then I like to trade off key daily zones of support resistance. So what I'm going to do, if you guys want how I find key daily zones of support resistance, follow up with me after the training. I will give you a lesson on how to find key daily zones of support and resistance. I'll give you a free training on that so you can find the key zones. And I break down my process of how I trade off those key zones. And so that's going to help you guys out without diving too much into it here, because we're going to go ahead and start wrapping this up. Lastly, we're going to talk about those simple trade plans, right? Which you guys already have an idea of the plans. So trade plan, it's your roadmap for every trade you take. It's going to help you stay disciplined, right? It's going to help you eliminate emotional decisions. So here are the main components of a solid A+ trade plan. Set your entry criteria. We just talked about that. The bottom or the top 50% of the order block, for example, that's your entry criteria. Determine your exit points, stop losses, and targets. We talked about that. Stops right below or right above an order block with a standard 3-to-1 risk reward. Those are your exit points for stop losses, for targets. Then, what's your per trade risk? Remember, it's 125. So go ahead and map out how much risk do I have. 10 points. Okay. 2 MES contracts. I say 10 points of risk. I'm losing 120. So that's how you go ahead and get position on that trade, right? And you know what your risk is going to be before you take it. Okay. Define the trade size. That example would be 2 contracts. Some trades it could be 3 contracts. Some trades it could be 5. It depends on how much risk on the chart, right? Could be 5 points of risk, 10 points of risk, 20 points of risk. Based on that risk you have on that trade, you know how many contracts to take and what contract to take. And again, standard 3-to-1 risk reward. Don't set targets based on the chart just yet. Just quick 3-to-1 setups and just bang those base hits out consistently, make money, keeps it super, super simple. And then you know when to walk away. 3 red trades in a row, you're done. You walk away, live the trade another day, come back tomorrow, and see if the market gives you better opportunity. Okay, it's going to keep you focused on high probability setups. Those are the 2 most simple, highest probability ways of trading without the overly complex BS. Okay, simple but effective. Removes the guesswork. You know what to do. 5-minute order block. You know how to enter. You know how to build a plan. You know how to get positioned. There's no more guesswork. There's no more emotions. You're clear. You're laser focused. It makes sense. And it's going to help you stay consistent and even make sure that if you have a 40% win rate, 50% win rate, you're still making money. You're still profitable, and you can be wrong more times than you're right. It's going to help you stay consistent even during some losing streaks. All right. And then lastly, key thing, guys, key thing. You're trading for a reason. You're entrepreneurs. You have an entrepreneurial spirit. You want to trade for money now. You want to trade for generational wealth, leverage your day trading skill set, manage long-term accounts, set yourself up for millions during your retirement, create a legacy, build generational wealth, pass it down to your kids, right? You have an entrepreneurial spirit. This is a business, right? This is a business. So you got to start treating trading like a fucking business. Excuse my language. But so many traders do not operate trading like a business. No wonder they freaking fail. 95, 99% of traders fail, right? For a lot of reasons. They don't ever understand how to, manage risk, right? They don't get their mindset right. The biggest thing too, though, is they don't treat trading like a business. You need to treat it like a business. What do businesses do? They collect data, they analyze data, and they make data-driven decisions. Before they make any decision within their organization, their decisions are backed by data, right? Coca-Cola, still to this day, spends millions of dollars in ad spend. You see commercials all the time. They're fucking Coca-Cola. Everybody knows about Coca-Cola. Why do they keep spending millions and millions of dollars a quarter on advertisement? Because they looked at the data. When we don't spend money in ads, we don't make the revenue. When we spend money in ads, we get 10x the revenue. So, okay, based on the data that we collected and analyzed, we can make a decision to keep putting millions and millions and millions of dollars a quarter into advertisements because clearly it makes us more money. There is a return on that investment, right? So again, treat it like a fucking business, guys, right? Quit playing games. It's not a game. You want to make money? You want to take it serious? You want to change your life? Treat it serious, okay? It's not a hobby. It's a business. Treat it like a business. So collect data, review data, and make data-driven decisions. So log your trades. That's how you collect data. Log your trades, track in progress. It's going to help you improve over time. And you need to have that detailed trade log. It's going to help you identify your strengths, what's working, your weaknesses, what's not working, and any kind of trends, patterns, right? Maybe the nights that you don't sleep good, you lose a lot of money. Well, shit, quit trading if you don't get good sleep the night before. Just collect the trading data. Analyze the data. You're going to notice your strengths, your weaknesses, what to double down on, what to stop doing, any kind of routine, any kind of trend that you notice. It's going to help you make decisions to move forward to become a better trader. All right? So, basic trade details, your ticker symbol, entry price, exit price, position size. That's simple. Anybody can do that, right? What's your profit or loss in dollars or points? Keep track of that. What's your average risk to reward ratio on the trade? Keep track of that. But the biggest thing, the two biggest things that traders don't do when logging trades is they don't notate the reason for the trade. Why did you get in? What was the strategy? What was the setup? And the next biggest thing is their mindset behind the trade, right? How were you mentally? Were you dialed in? Were you disciplined? Or were you trading with emotions? No one ever actually journals. They collect data, they log their trades, but they don't journal the trade. Was I revenge trading? Did I just have a bad losing trade and so I was just trying to make that loss back? Right? Did I not sleep good the night before? Did my wife yell at me last night so I came in pissed off? Right? Was I mad? What was your emotional state before taking the trade, during the trade, after the trade? Right? Notate that. That's key data as well. How did you feel during the trade? Did you feel confident? But then did you get nervous when the stock started to pull back so you freaked out and got out? Journal everything about the trade and put notes in there. What went good? What mistakes did you make? What could you do different next time to see better results? Be as detailed and be as thorough as possible. Like I said, you're going to spot trends in your successes and your failures. You're going to know what to go all in with and what to stop doing. You're going to identify and fix mistakes, emotional decisions, poor entries, poor exits, whatever the case is. And that overall is going to help you build confidence, right? By tracking your progress over time. And let's be real. The more confident you are in something, the better you do at it. If you have done anything in life where you're not confident, usually you kind of suck. But the more you do it, the more confident you become. The more confident you are, the better you do that. So the more confident you become with your trading, the better trader you will become. It's just a byproduct. Okay. And so I like TradeZella. All right. Go to tradezella.com. It's a really nice online interactive trade log system. It's awesome. You can import your trades, right? It collects all the data for you. You got a little notate section. It's a really cool system. It's a very cool system. And there's a lot out there. You have like TraderView, TraderSync, all kinds of different, trade log systems. I would say TradeZella is by far the best. So go set up an account with TradeZella, okay? And then even log your demo trades. When you go to Tradeovate and you sign up for that 2-week trial and you start to practice all these things and implement these things, start collecting data now, right? Collect data now. Get into a habit of doing that, okay? Review the data. Analyze the data. Make data-driven decisions. I would even go ahead and do this now in tandem with setting up a futures account for a demo to get your feet wet. All right. And so, like I said, breaking it down so an 8th grader can understand this. No fluff, no BS, no jargon, no technical anything, right? Just straight to the point. Help you guys get up and running with futures 10 times faster. This is what you need to know as far as what's the difference between futures and options, right? Different types of tickers, risk reward per point. That makes sense. Best platforms and demo accounts to set up with, the best brokers and prop firms to get going with, how to structure your account and how to restructure, right, the structure of a prop firm account, the best 2 strategies to learn that work best for futures trading, in my opinion, right, how to build trade plans and why we log trades. If you just focus on those steps, you learn these things even further, you dial these things in even further, you start to implement these things on top of everything else that we'll support you guys with, additional trainings and whatnot. Again, a couple of weeks, you'll be up and running with futures, and you'll do far better than 95% of futures traders do. They don't have any kind of structure. They don't have any kind of system. They don't really have any kind of guidance. All right, so let's go ahead and open up the floor for some Q&A, guys. All right, let's go ahead and do some Q&A. Questions that you guys have. Let's dive into it. Make sure we bridge the gap. All right, Q&A open. Ask away. Fire away, ladies and gentlemen. I know we talked about a lot. There was a lot here. Okay, so if there's something that doesn't click or make sense, let's talk about it. Does Tradeovate charge per trade? There's going to be commissions and fees per trade. Yes. So go to tradeovate.com, look up their fees. They have different kinds of fees. Every broker is going to have a different fee. So you just got to go to tradeovate.com and look at what their fee structure is, and you'll know what the fee structure is per trade, per contract that you take. So yes, they will charge you commissions and fees per trade. Yes. Absolutely. If you want this recording, go join the free community. Link is in my profile on TikTok. It's a Linktree link. Go click it, sign up for the free community. And what I'll be doing is I'll be editing this, and I'll be sending the resources to people in the free community. All right, so this guide that we were going through, I'll send that with the recording to the video, so you guys can go back, rewatch it, and start taking these steps, guys. When I'm talking stocks, it's crazy. When I talk stocks, we get like 100 viewers. When I educate people, no one cares. So for the ones that stuck around, for the ones that are here, awesome, right? There's some gold nuggets here, right? Even if you took one little thing away, that's a gold nugget. You can apply it. You can run with it, right? You can take that next step, learn how to trade, become better, get into the free community, learn how to find those key zones, learn how to read price action, learn how to find order blocks, right? Actually take the next step. But it's crazy when I do free trainings or lessons, no one cares. They just want the get-rich-quick answer. They want it now. They're not willing to put in the work. So I respect the 41 of you that stuck around. Pay attention. They're going to follow up with some questions. You're the real ones that actually want to succeed with this, and that's awesome. There's a unique methodology to identifying order blocks. So that is one of the lessons that I don't give away for free on order blocks, but you can go to YouTube and figure it out and learn how to find order blocks. It might be complex. They may use all the jargon. I don't use the jargon. I don't fluff shit. It's no BS approach. But that's one of the things that I do teach my students. But it's not one of the free lessons that we have right now. But the key zones of support resistance, right? The key zone support resistance, that free training is in the free community. So it's super easy, guys. If you just literally go to my TikTok page, right, my profile where we have 102,000 followers, and click the link tree, okay, and you click where it says join my free community, and you scroll down, you can just join the free community. And then once you're inside of the free community and you go over to the free education tab, there's so many free lessons. 6 lessons from our course material, a lesson on fib retracements, 10 steps to become a profitable trader in 2025, how to structure your account, create risk parameters, how to build plans on options, right? How I find my key zones of daily support resistance to trade off of. There's a lot of free resources here, tons of A+ education. And the other thing, too, is you get to tap into the community. So if you have questions, we can support you, we can help you, and it's free, guys. So if you want to learn how to find the zones, read price action, mindset-related tradings as well, this is where you guys want to be. Absolutely. And that's where I'm going to be reposting this as well. So I'll post this on up in there, the video recap link with this breakdown as well. So you have access to this, what you see. And, dude, there's some gold nuggets in here for you guys. Uh, 12 months minimum of expenses. So if you like $5,000 a month pays the bills and lets you live comfortably, it's $5,000 a month. You need to have $60,000 aside before you think about trading full time. I would say at least 1 year of income where you can live comfortably. You got a lot out of that, so definitely appreciate it. Yeah, and like I said, it's a high level overview for getting started. We didn't get into the weeds. There's a lot more to learn, but you got to have a foundation first. This is your foundation. Now you have a foundation. You can start taking some steps forward. Then learn more. There's so much more to learn. But without the first step, where are you going? What are you doing? You're going to go about it the wrong way. This is going to help you take the right steps in the right direction, solid foundation, move the needle forward, and start to implement some of these things. Do I share my trades with members? I trade live with my members during the week, yes. So any trades that I'm taking, I call them out, I break them down, I educate them, we take them together. If traders want to take them with me, I help them find their own trades, break them down, help them build plans to get in. It's one awesome community. Yep. Yeah, I've been trading for 10 years, guys. I've been coaching for 5 years. So I've been coaching longer than most of your TikTok traders have been trading themselves. So kind of put that into perspective. A lot of people that are out there making content around trading that some traders take advice from, they've been trading less time than I've been coaching. So just think about that. Proof's in the pudding. I don't like to toot my own horn, but I know what works for traders. I know how to direct traders. I know how to get traders results quick. It's just from experience. Right? I've been doing this for a long time. Nearly a decade trading, 5 years of coaching, and it just comes with experience. The more you do something, the better you come at it. And I've just done it for a long time, and I've gotten really good at this. There's never anything wrong, Stu, with buying golf clubs, okay? All right. I don't know about selling your Ethereum for that, but hey, man, there's nothing ever wrong with selling a golf club. Or buying golf clubs. And so here is an example of a trade that I took this morning on NQ. I'll show you guys. I just started a combine challenge with my students inside of our mentorship. And so we just started a combine. We're going to pass these in about a week or two, and we're going to get some funded accounts, and I'm taking them through this process with them. But here was a trade that I took right here. Okay. So if you're looking at my screen and you're wondering what an order block is, this was what we call a bullish order block. See that red candle right here? That red candle? That's a bullish order block. Okay. If price returns to it, typically we get a reaction. But the next candle right here, if you look at the next candle, was inside of some of that order block. So what I like to do is I actually like to take it down to where I have nothing inside the order block. Like the next candle after that, nothing in the order block. If I leave it here, that's a pretty big order block, but that's a valid order block. But I see the next candle was inside of this order block. So I still like to drag it down like this. That's how I like to do it. That's just my own unique methodology to it. So that gives me a tight dialed in zone that I want to trade inside of. Okay, what do I like to do? Entries at the bottom 50% of that zone. So entries at the middle or down towards the bottom of that zone. My entry here was in the middle. My stops were right below it. And I set a quick 2-to-1 risk reward for a quick scalp in the pre-market session. You can't see that target was hit, but if you go to a 1 minute, you'll see that we had the reaction. Right? So it came down and we had the reaction out of that order block and I got a quick profit. I got filled right here the first time we came into the order block and I took it up for a quick 2-to-1. And so it was very simple, quick scalp inside of an order block. And I think I still have the screenshot of the trade. Yeah, you can see that was right in the middle, stopped below it, set a quick little 2-to-1, took my 2-to-1. I called it a day, right? I was able to get a quick little $277 out of the trade. It's not bad. A little bit more than a 2-to-1, right? My risk, 125. What am I looking to get? 250 to 375. I just ran my stop loss up to a 2-to-1. It got me, and I just took my quick 2-to-1. Rinse and repeat. Rinse and repeat. Rinse and repeat. Yeah, links in the profile, man. So just go click the link in my profile on TikTok. It's a link tree. Click where it says join the free community. Scroll down, click the free community button, and get tapped in. One contract. There's only one contract. I had like 6 points of risk on the trade. It was about a 120 risk. So nothing fancy. It was just an order block. Came down into it for the first time. Entries were correct. Risk was low. Got my quick 2-to-1. Rinse and repeat. Let those base hits add up to nice months, guys. I mean, just do the math. I just really want to put this into perspective. A lot of you are like, Josh, I want to make $1,000 a day. I want to make $500,000 a year. You'll get to that point. You'll get to that point. But it still comes down to base hits. You should focus on base hits. Right now, what's your base hit? 250. Why is your base hit 250? Because you're risking 125 a trade. Okay? Risking 125 a trade to make what? Quick 2-to-1s. That's a realistic base hit. Okay? When you want to start making $1,000 a day, slowly increase your size to make your base hit $1,000. Right now, your base hit's 250. Okay? If you get more than 250, great. But your base hit's 250. In order to make more money, you don't have to catch more of the market move. You don't have to swing for the fences. Quit trying to get home runs. Just slowly increase your size to slowly increase what your base hit is. But quit trying to fucking hit home runs and make millions of dollars. Right now, get consistent first with locking in base hits. A lot of people don't see the power of how this adds up. Right? $250 a day consistently on average. Right? Some days I won't trade. Some days I'll have $100 of profit. Some days I'll have 2 winners back to back and I'll make $500. Right? Trading's not linear. Profits aren't linear. Okay? It fluctuates. But I know based on my system, my win ratio, my risk reward parameters, I know what I realistically average per day per week in the market. About 250, 300. Let's say 250. How many average trading days do you have per month? 20. That's $5,000. In the moment, damn, I only made 250 today. That's not going to pay the bills. Quit thinking so narrow-minded. 250 over 20 days on average, that's $5,000. Does $5,000 pay the bills? Does $5,000 make a difference in your life? And that's talking 250 a day. We have potential to make 250 on a trade, right? Based on risk reward parameters, risking 125 to make 250 to 375, right? 2 trades a day on average, 3 trades a day on average with a 60% win rate. You're going to average over 250 a day. But let's set it at 250. That's $5,000 a month. Now you're like, wow, that's a good month. I made $5,000 this month. What's that a year? That's $60,000 a year. Quit trying to make all the money today. Quit trying to make $1,000 on a trade day one. Just get consistent first with base hits. Let the base hits add up to damn good months, and then take the next step. Then scale up, size up, right? Leverage your skill set and just start learning how to make more. But you guys could still have the potential on a very small scale to let those base hits add up to like $5,000 a month. That's $60,000 a year. Who's complaining on that? You guys got to just get out of the mindset you guys are in. Like, man, I want to make $500,000. Well, you can't fucking make $500,000 a year if you can't do 60K first. Huh. So learn how to do the 60K first. And then what's the next goal? Over 100K. What's the next goal? 200K. Take it slow. Take it at a good pace. What other career do you know that you can learn how to do this in 3 to 6 months with no college education, not go into debt for a college loan, student loan, whatever, and you can make over 6 figures a year, and you only have to work less than 2 hours a day? You tell me a career right now that exists where you can make over 6 figures a year and only work on average 2 hours a day and not have to go to school for 4 years and go $100,000 in debt. I don't know one that exists. But here's the thing. If you want to go make 6 figures, what do you have to do? Go to school for 4 years and go $100,000 in debt. Okay. If you learn how to get to making 6 figures a year in the next 4 years, you're already doing better than the person that went to school for 4 years, because they're not getting out of school making 6 figures the day they get out. So you're already ahead. But quit trying to get rich quick. Quit trying to make all the money now. Give yourself time, a year, 2 years. If you learn how to make multiple 6 figures a year in the next 4 years, you're still doing 10 times better than the person that went to school for 4 years to get a degree that still has to start entry level and work their way up. So put these things into perspective. Quit putting an expiration date on your success. If I don't make $1 million next year, then I'm going to quit. Why? Right? Quit trying to put an expiration date on your success. Get consistent. Let your base hits add up. Then slowly increase what your average base hit looks like over time. And then it's going to be easy to make multiple 6 figures a year in trading. But quit trying to do it in 6 months. Quit trying to do it in a year. Give yourself time. Right? Give yourself time. Am I AI? I'm not AI. 3 to 6 months? No, I teach people how to trade and get consistently profitable in their first 3 to 6 months. Yeah, honestly, under 3 months. I've done it under 3 months consistently. 3 to 6 months for a brand new trader. To make multiple 6 figures, it could take more than 3 to 6 months. But to get to consistent profitability, yeah, give me 3 to 6 months with somebody. I can do that. That's easy. Yeah, 3 to 6 months for brand new. Someone that already has experience, 3 months or less. If you guys have any questions about like working with us in the mentorship, just shoot me a DM on TikTok. Send me a DM, and I'll answer any questions you guys have. Or if you go click the link in my profile, the link tree, and then go to the page where it says join the free community, and you scroll down where it says check your fit, you can just check to see if you're even a good fit for the program. If you're a good fit, we can have a quick phone call conversation and go from there. But it takes like 60 seconds to see if it's a good fit for you based on your experience, your objectives, your goal, everything like that. And that'll give you an idea if like we think you're a good fit to get you those results in that 3 months. Again, if you're a brand new trader, like brand new, day one, what's a candlestick, what's a time frame? Give yourself 3 to 6 months. If you have experience and your biggest thing is mindset, emotions, lack of discipline, and you just need to simplify your approach, we get it done in like 3 months or less. Yep. But everybody's different. Everybody's different. That's just the trend that we see. That's the trend that we see. Some people take a little bit longer, 9, 10 months. Some people are more stubborn when it comes to mindset, and it takes a little bit more work to get them there. But it's like those people are like 90% there. There's just like this 10% disconnect, and most of the time it's mental. It just takes a little bit longer to get them over that mental hump, but we still get them to the point where they're making money. It's just they have setbacks, right? Because their mental's not dialed in, and we just got to really work on that. But the trend is brand new trader. What's a candlestick? What's a time frame? 3 to 6 months to consistent profitability. A couple $100 a day consistent. 4, 5, 6 grand a month consistent. People that have experience that are just overcomplicating their trading. They have too many technical analysis stuff going on. And their mindset's the biggest factor. Like they just don't have discipline. They give into their emotions all the time. 3 months or less. I only trade 2 hours a day. So from 9:30 to 11:30 are the days that I trade. 9:30 to 11:30, 2 hours a day. Right? 3 days a week. I don't really trade Tuesdays. I don't trade Thursdays. So 3 days a week, 2 hours. Even if I traded 5 days a week, I'm spending less than 10 hours a week trading to exceed my goals. I don't trade from market open to market close. I don't trade pre-market 7 a.m. to post-market 7 p.m. I don't sit in front of the chart at 10 p.m. at night. Like, no. 2 hours a day, 9:30 to 11:30, the best time of the day to trade. I come in, identify the opportunity, I capitalize on it, make my money, I go enjoy life, right? So 2 hours a day, 3 days a week, I'm spending 6 hours minimum in the market. Just call it 10. 10 hours a week is what I spend in the market. Let's just round it up. Okay. Okay, that's still like 80%, 75% less time than what someone spends at their 9 to 5. And I can make more than that. Yeah, 2 hours a day, guys. You don't need to spend all day every day in the market to be a good trader. That's a big misconception that people have is, oh, I'm a day trader. I got to trade all day every day, 10 times a day. False. Spend the least amount of time in the market as possible, make the most amount of money. That's it. The least amount of time in the market, make the most amount of money. That should be your objective. That should be your goal. Okay. But can you do a handstand? Yes, I can. You want to see me do a handstand? Don't tempt me with a good time. I might knock my computer over. But yeah, guys, today was a heartfelt get your shit together day. Take trading serious. It's January 28th. If you just started this on the 28th, if you just started this on the 1st of the month, 28 days in, you would be so far ahead than where you're at now. But most of you aren't anywhere close to where you want to be because you haven't taken action to get to the level of trading you guys want to get to. So, like, take it serious. It's still so early in the year that if you just dedicate the next 2 to 3 months to learning the skill set, to putting in the work that it takes to have the skill set, you can make some really nice money this year. Or you get to have another 2024 where you don't really do what you should do. You look back and you're like, man, I didn't really do good in 2024. All right, do you want this year to be different? Oh, if you do, then make a different decision. To actually dedicate some time to learn this, to master this, and you could still have a really good profitable year to where you make some extra income for yourself. Just think, making another 10 grand this year. Wouldn't that be nice to even just make an extra 10 grand this year? Now, you can go on a nice vacation with your family. You can buy yourself something nice, right? And that's just like 10 grand. $1,000 a month for the next 10 months. Like, come on. So just get serious, guys. I like these tough love days. I want to see more people winning, more people making better decisions as traders. I don't want to keep seeing people fail. I've been doing it for such a long time. I see way too many people fail, and it's crazy. Took me 3 years to start making money. And we put together a lesson on overnight option swing strategies, ideal scenarios. Yeah, we do swing trade analysis a lot, especially on Fridays. Anytime someone has a swing trade opportunity, we analyze it, we pick and choose options, we get position, build plans. But yeah, if there's any like specific strategies we want to talk about, yeah, we can definitely do a little lesson on that. It's definitely not easy, and good trading is rare. You're right. It's not easy, but it's simple. Not easy, but it's simple, right? Good coaching, it's rare to find because you got to look at 90% of the coaching space for trading. Really just take a moment and think about everybody you see on social media that talks about trading. They're young. They've only been doing it for a couple of years. They're inexperienced. They don't know how to coach properly. Maybe they're good at trading, but they can't coach. Do you want to work with somebody that's just a good trader? Or do you want to work with somebody that has years and years and years of experience coaching others and it's been proven? Right. So you look at this social media space, crazy, right? That most of them only have 1 to 3 maybe years of full experience trading. And that's the space. It's saturated. It's rare, like you said, to find good coaching. Yes. Did I lose money on Nvidia? No. You got to go check to see if you're a good fit first. So just go take like 1 to 2 minutes. Go click the link in my profile on TikTok. Go down to where it says join free community. Check your fit for the mentorship. And just answer a couple quick questions, and you'll get all the information you need, Davido. How many people do you coach in your classes? I take on 3 to 4 new students every rolling 30 days because I give a lot to my trading students. I mean, a lot of my time outside of market hours and then a lot of time in market hours. So my bandwidth, as far as the time that I have, is about, enough to fully allocate time to really properly assist about 3 to 4 traders every 30 days, every rolling 30 days. That's why you always hear me say we got 1 seat open, we have 2 seats open. Every rolling 30 days, we'll have more seats that come about. The first 30 days, we're really intense on one-on-ones, and we're doing a lot of one-on-one sessions. And so I just need the time allocation to have to commit to those and give people my undivided focus. Right now, though, so you got 3 to 4 people per month that comes in. Right now, active, the ones that still come back to be a part of the sessions, because a lot of them are just kind of out there on their own doing their own thing now, which is awesome. You're probably like 20, 25 people all at once, all at one time. So it's not flooded. It's not crowded with thousands of people. It's not your typical experience that you're used to with just like hundreds and thousands of people. We keep it tight. We keep it small, just so you guys get our undivided attention and you get the personalized help that you guys need. Yeah. Let's see if we have any trades. I mean, I'm already here. Maybe we have something that sets up. Can't go a day without the hedgies. That's funny. Let's go get them hedgies, and I'll post those up. We don't have anything yet on those. Still populating. Yeah, we're not getting anything on edgies. Yeah. There we go. Took a minute. All right, well, I'm going to head out. Do you trade just during the market open session? Yep. Yep. So 9:30 to 11:30 is my sweet spot for trading. I coach my students from 9 to sometimes like 11:30, 12. So we have really long extended sessions, but like me trading, I trade 2 hours a day, 9:30 to 11:30. And that's when we find the best trades. That's when we come in, capitalize, make our money. Yeah, I don't trade pre-market a whole lot unless there's something good there. I don't really trade after noon. I definitely don't trade evening a whole lot. All right, guys, I'm going to head out. I'm not even usually here on Tuesdays. I got a lot of stuff going on behind the scenes. My day full of calls and one-on-one calls. So that's what I do on my Tuesdays, man. I do a lot of one-on-one sessions and calls. But if you guys have any questions, you can send me a DM here on TikTok. If you guys want to go join the free community, you know, the link's in my profile here on TikTok. Join the free community, get some free trainings, get some support, all that good stuff. And then, yeah, if you guys want a recap of the Futures Masterclass that we just did, make sure you join the free community. I'll be posting up the information later today for you guys to go back and rewatch, and you guys will be all set, ready to rock. But peace out. Stay blessed, everybody. Have a good one, and I will see you back here tomorrow morning.